I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is July 19th.
And today we're going to talk about mortgage rates and where the Fed's pushing things. Number 2, the Fed prediction on the next meeting next week. What are the greater Phoenix area median home prices today? And how many greater Phoenix area home listings are there? Are they going up or are they going down? And the truth about foreclosures in Phoenix. So let's get to it.
Remember, this is for informational purposes only. This is not financial advice. And if you like what we're doing, be sure to subscribe, comment, and like, or give us a call. We'll be happy to help you with your scenario, your questions anytime. All right, the 30-year fix today we see from the Mortgage News Daily, which does that summary, or what is it? Really is it an It's an index that they have created
nationwide.
Nationwide takes all of the lender rate sheets and comes up with an average. Right now, the 30-year fix is showing 6.9%. The 15-year fix at 6.31%.
And FHA and VA are almost always the same. So 6.5 for FHA, 6.51 for VA.
These are not the Mortgage Brothers rates, but our rates, we believe, are always better than the national average. But call us, we'll give you a quote for your scenario. The 10-year yield is something we're going to show you right now. This is in the news a lot. It's what drives the mortgage rates. So when people want to know about where mortgage rates are going to go, we look at the 10-year. You always want to look at the 10-year because the 30-year just kind of tags along.
Yeah, the 30 years too long and the 2 years too short. So the 10 years always been that big metric.
So I've created two lines that are parallel, these green parallel lines. This started back in November of 2022, and the 10-year was trending down and was basically bouncing up and down inside this channel. And we call this top green line a resistance line, and it bounced, we pushed through that line on June 29th, and actually that price went up to the high that was made in March of 2023. And prices come back down. And what this means is that prices have been improved over the last week, but they're certainly higher than they have been over the last month.
Right. Yeah. And, to everything that has a pattern, you can always break out of that pattern. Typically not when you have some type of, what do we call them, those lines? That's the resistance.
Right. Support and resistance.
And then the support lines.
Just the technical analysis of the chart.
Yeah. So typically, you're not getting information that's pushing you above or beyond that, but every once in a while you do. And we did see that. And if you go back, through some of the materials that were being published, you would see why. There was a lot of fear. Inflation was just much more sticky then. It is coming back down. So hopefully that's an anomaly.
Yeah. So next week, the Fed is going to be talking. And if the Fed says things that are favorable to the market, we will see the 10-year yield come down through this green line. But if it's negative news or the market doesn't like it, we'll see this 10-year yield go right back up.
Mm-hmm. And if you don't like those type of charts, basically what that chart is telling you is that we see things coming down slowly.
Yes. And this is the CME group, that it's the futures traders that are looking into the future and betting on basically what the cost of all sorts of things are going to be, like the cost of oils and, so all the different currencies, S&P 500, the NASDAQ, but they also do interest rates, the 10-year bond. And what they're betting on is, they're constantly betting on those, but they have a Fed rate watch, and the Fed rate watch is showing that there's a 97% chance that on July 26th, the next meeting, the Fed will raise the rate 0.25%.
Right, 25 basis points. So basically when you see 97.3, that's basically 100%. So it's almost a guarantee. If they hold, or if they actually push past it, it would shock everybody in the marketplace. There'd be a lot of money lost because of all those future traders.
I drew this green line right here. You can see that there's the meetings here on the left. September coming up, November, December, January. January is the last month, January 2024, when the traders at the CME group believe that the Fed will hold. They believe that basically the Fed rate will come down, and starting the March meeting, March of 2024.
So basically, until January of 2024, the majority of those future traders think they are going to raise 25 and stay. Once we get into March, that's when the majority of these future traders think it's going to start coming down. So it's just the majority. You can see on this chart, there are people saying, no, it's going to go up, or no, it's going to come down. But the majority of people think it's going to follow that green line.
All right. Here in Phoenix, we have the Cromford report. It does lots of analysis on real estate, and it shows the monthly median sales price on this chart. I really like looking at this because it shows us all the way back to 2014. The median sales price peaked in May of 2022 at $480,000, and then it came down to a low around January of 2023 and has been climbing ever since. But for the month of July 2023, for these 18 days, this is as of July 18th, but there's a little dip. There's a little dip in the median sales price. Well, we'll see how the month ends and what that average will be, and we'll report that later. But right now, the median sales price is $435,000.
Yep. So the big takeaway is, over the past couple of months, it's been going up. So that trend, I think, is surprising a lot of people. We don't know how long that will continue. We do see this little dip, but again, we'll see next time, if it's going back up.
Yes. Active listings. These are the inventory on the market, the number of sellers who are selling their homes. Just in, going back back to June of 2022, that's really the last 13 months. We see that the number of listings hit a peak on October 23rd, 2022. And there was about, close to 20,000. It was 19,592 listings. Today, there are 10,121. And it's a little bit lower than it was a couple weeks ago. It's really flattening right now. We'll see if it continues to go down. Maybe we'll see inventory come up. But again, more inventory is not a bad thing in this market because we need sellers to be okay selling.
Yeah,
because there are a lot of buyers out there.
And part of the reason why we have the pricing that I think we do have is because of the lack of inventory. People are locked into their homes, not physically, but financially. They're not wanting to leave their 3% rates, their 4% rates. So you can see it here, only 10,000 homes available today.
And a lot of a lot of people don't hear a lot about foreclosures. A lot of people hear about them, whether it's neighbors or you're just watching or reading a news article. The big news agencies love to talk about fantastical or just kind of scare tactics to get people to read.
Catchwords.
Yeah. Hey, the Phoenix housing market's crashing. Oh, beware. There's all sorts of stuff you'll find online from so-called gurus, but these people are really wanting you to watch their channels or read their articles to really scare you. The fact of the matter is foreclosures. This is the trustee sales notices, which are when someone's late 90 days, they get a notice in the mail. Okay, and that notice is also electronically put or placed into the county records. We're at almost an all-time low. And which means people are making their mortgage payments.
Yeah, and that's the whole point about talking about foreclosures is that some markets you're going to have high foreclosures, other markets you're going to have low, but it tells you a ton in just that word. Are there a lot of foreclosures? Yes or no? That tells you an incredible amount.
Yeah. So market is strong. People are making their payments. And that kind of goes to our next chart. Everything in the green. This is the 17 most populous cities in Maricopa County. The Cromford report is showing that the market index, this is the Cromford market indexes, all of these cities are over 100. And the higher the number, the stronger the city is for sellers, meaning it's a real seller's market. Mm-hmm. And there's more buyers chasing the sellers. So, for example, let's take a look at Chandler. It's the top of the list. It's 331. That means basically there's 3 buyers for every 1 seller.
Which is an incredible number.
Yeah.
I mean, it's almost mind-blowing, and you won't think it's mind-blowing until maybe 3 or 4 years from now, and these numbers might show something drastically different.
Yeah, and then they are moving around every time they report every week. There's a movement up or down. But what we've been tracking this for a long time. These cities have. I mean, there used to be some cities, 7, 3, and then now 0. There used to be in this yellow below 100 mark where it was a buyer's market. We're solid in the green. we'll continue to track it.
And we do also have some, monthly, change.
Yeah.
And I kind of wish that all those, little buttons were green, because you look at that red arrow and you're like, oh my gosh, it's down 8%. Well, that's down 8%, month to month. But look at the number next to it. Fountain Hills still has 2 buyers for every 1 listing.
That's right.
I mean, these numbers really are.
10 of these cities have just shown a little less buyer demand in the last month. But again, that's going to happen back and forth. But yeah, very, very strong demand in these cities, with Chandler, Fountain Hills, Glendale, Gilbert, and Avondale leading the charge. If you like what we're doing, be sure to subscribe, comment, and like. Let us know what your scenario is. We'll be happy to help you. Take care, everybody.
All right. Hey, thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.